Have you heard about Robo-Advisors? Or maybe you're just tired of do-it-yourself investing. My guest this week, Kyle Prevost, hosts the Canadian Financial Summit and is an expert in Robo-Advisors. Kyle breaks down what a Robo-Advisor is, whether there's a wizard behind the curtain, and how they can help you either get started investing or switch to an easier way to invest. Welcome to the MapleMoney Show, the podcast that helps Canadians improve their personal finances to create lasting financial freedom. Having a good credit score is important to help you achieve your financial goals. It can help you get better rates on your mortgage, insurance, or a personal loan, and can ultimately help you save money. That's why you should get your free credit score from our sponsor, Borrowell, today. Check them out at maplemoney.com/borrowell. Now let's talk with Kyle. Hi, Kyle. Welcome to the Maple Money Show.
Hey, Tom. Thanks for having me.
So I wanted to have you on. I think you're probably the first person that even really told me about robo-advisors in Canada. But before I had fully clued in, you were in on this really early. So I figured you're the best person to kind of bring on the show and really get into it. We've talked about ETFs a couple times on the show and just lightly touched on robo-advisors. But I want to take this time while you're on the show and really dig into everything about them.
Yeah. It sort of happened by accident that I became, I'll suddenly start describing myself as an expert because I was a long time on that ETF passive investing train and still am. But that sort of naturally led me down the robo-advisor path, I guess.
Yeah. So can we go right back to the basics, sort of what is a robo-advisor and what do they do?
So I always start when I describe what a robo-advisor is by saying that it's kind of an unfortunate sector name that they've been given. And I'm not sure that happened organically when I look at some of the entrenched interests in the financial world. Because when you think of the term robo-advisor, there's all sorts of like associations with robots, sort of computers, like non-friendly, non-human things. Mm-hmm. Really what robo-advisors simply are, they're automated investing solutions that you will set up with the help of another human being if you want. There's all the major robo-advisors that we have in Canada. They'll have a ton of different ways to talk to a real live person, whether that's on a phone, through a chat box, Skype interview, email, whatever's easiest for you. You will not have to invest money before you talk to a human being. I can tell you that right now. The good news about an automated investment service, such as a robo-advisor, is that it's going to take away a lot of the human error that we often make. When I say human error, I mean things like our brains telling us we need to sell a stock because we saw the stock price going down, or we heard someone talk about it at the water cooler. And those type of human errors are only natural. Our brains are sort of hardwired. Our lizard brains are hardwired to make these mistakes. And even though we know about passive investing and we know about ETFs, and I literally wrote an ebook on ETFs and I tried to help people passive invest that way, it is still really hard for a lot of people to take their hands off that steering wheel a little bit and let that automated control take over. But statistically speaking, it is going to be a good bet. Passive investing with a robo-advisor using automation to your benefit is good. It's going to be to your benefit in the long run.
I wonder, and maybe this stat doesn't exist, but I wonder how many people sign up and they don't realize that they can actually talk to someone. Have you ever heard anything about that?
You know, we did a poll on robo-advisors at Young and Thrifty there a few months ago. And I do remember that roughly a third didn't use they had never bothered to contact a person, but there was 2/3 that had somewhere around those stats. So to answer the question, I guess I think they make it pretty apparent that you can, but there's a lot of people that say read MapleMoney or read another site, and I think they know sort of the ins and outs of a robo-advisor, and really they just want the automated solution of just super simple, being able to send in automatically, get their paycheck, shoot a certain percentage of it off to a robo-advisor, get a nice diversified portfolio that they understand, and never worry about it again. And I guess you don't really need to talk to a person to understand the math behind that.
Yeah, like I've told you before, I'm considering the idea of going over to a robo-advisor, and it's not because I don't still love the thrill of rebalancing my portfolio, but it's also just to free up some time, and it's not necessarily that I need to talk to someone. I guess it's always nice to have someone to talk to, but just to sort of outsource that and get one more thing off my plate. That extra like 0.4, 0.5%, that doesn't sound that bad to me.
Yeah, what I'm going to tell people is when I write about robo-advisors, they're not. A lot of people say, well, we'll see what return I get with robo-advisors. Now we say, well, you're missing the whole point. Like this isn't like some new investing system. All that robo-advisors do is take the Nobel Award winning passive investing strategies and make them as easy as possible. And so what they really represent is one spot on the continuum between completely picking your own stocks with, a stockbroker, discount brokerage if online, and a full advisor where they're likely to be putting your money into, if you live in Canada, fairly high cost mutual funds. And that costs a substantial amount of money. Too much to my way of thinking, way more than I'm prepared to pay or recommend anyone else pay, especially in Canada. And so, you can pick your own stocks. Vanguard has a really cool product out now where it's almost like a robo-advisor. It's several ETFs that will rebalance in one. And then on the next step up on the continuum is a robo-advisor, where if you want some advice on should you contribute to a TFSA or an RSP, most robo-advisors will be able to help you with that. If you ask them about setting up an income trust, if you are fortunate enough to have built a substantial amount of wealth in your life, I'm not sure that all the robo-advisors will be able to handle something complicated like an income trust or like long-term sort of wealth management advice. But for the vast majority of young people in Canada and people with sort of an average amount of assets, robo-advisors are going to give you just as much, if not more, advice than you'd receive typically at a lot of more sort of full service, more expensive options in that continuum.
Yeah. And I think their advice is probably a little more unbiased, because ultimately they're just recommending these market ETFs. There's not sort of this car salesman approach that you might get in other places.
Yeah, well, and they actually legally, they're a portfolio manager, which means in Canada they have a fiduciary duty, which most people are surprised when you start digging into the weeds on this a little bit. And there's weird words like fiduciary, but you can call yourself an investment advisor. In fact, in my personal finance course in this classroom here, I get the kids to make their own personal advisor, financial advisor sticker and put it on just to prove like literally anyone can call themselves that. There's no rules or regulations around it. And the crazier thing is that they actually are not legally bound to give you good advice. They can give you advice in Canada that will pay them much more in commission, but it may not be in your best interest. And as of today, there is hardly any, depending on the province you're in, there's hardly anywhere to go or any laws to support you if that person does not have a fiduciary duty to you. Now, if they're a portfolio manager and they have that fiduciary duty, there's a lot of laws and they're very clear. So in a lot of ways, robo-advisors voluntarily are held to a higher standard than a lot of other investing options out there in Canada.
So with this basically just being ETFs that rebalance themselves, I think you've kind of already touched on this answer, is the idea that you could think, why wouldn't you just do it yourself? But is it basically that financial advice then that's sort of the extra little bit?
When I first started looking at robo-advisors, that's what I thought, is that, we talked about 0.1 and 0.4. So however folks want it, like 3% doesn't sound like a lot when you're talking about off the top of your investments. That's a ton of money, depending on sort of how you want to play around with it, what calculator you want to use. For a lot of people, that's hundreds of thousands of dollars in retirement. So then when we look at the difference between rebalancing your own ETF portfolio, we're looking at maybe 0.15, somewhere in there. And then the Vanguard all-in-one ETF solution, which I think is like 0.22 or 0.24, depending on sort of which one you choose. Then you got the robos that are 0.45 to 0.8 at the high end. I thought the difference there, which is still substantial, but it depends what you want to pay for, right, was the advice. I think now I've come full circle, and I actually think what you're paying for more than anything is the convenience factor. It cannot be underestimated. just taking your behavior out of the picture. Like even with the discount brokerage, Tom, you're talking about rebalancing. A lot of people just forget to go on and, manually send that transfer to their discount brokerage account. And then they got to do a little bit of math, like for 2 or 3 minutes worth of math. And that's just enough of an obstacle to like put it on the back burner and go play golf or whatever. And that automated solution of just every month or every 2 weeks or even every 3 months, setting up an automatic deposit and having it just dispersed around the world, really, through broad ETFs. I think that's what you're paying for more than anything. But it is nice to know that there is someone at the other end. If you want to send an email about, hey, I was just thinking about, do I want a little more risk? Or how did we talk about this when we first set it up? It's been a few years now. I'm looking at retirement. Should I look at this? Or even something like, hey, I want to set up an RESP for my children. What options do you have? And that it's comforting to know that there's some people behind the computer that can answer all those questions for you.
Yeah, it's always nice to bounce something off someone. Even if you think you know everything, it's no different than you and me. We write a blog post. It's still nice to have someone else look at it. Like it doesn't matter what you know. It's always nice just to bounce ideas off, if nothing else.
Absolutely, yeah.
What about when you're explaining the difference between robos and ETFs? There's one thing that kind of sits in the middle for me. What about the new product Passive that can connect to Questrade and basically rebalance, I think, within a couple clicks?
Yeah, I have to admit I haven't used Passive yet. So I probably am not the expert on it. Again, I would assume basically what happens is they're somewhere in the continuum. Do you know offhand, Tom, what they charge, like what their rate is?
Yes. I don't want to misquote it, but I think it's $60 a year.
Right.
And I believe there's actually a free option, which is a little more manual. But if I got it right, I believe it's $60 a year. Gets I think they send you an email and you can have this sort of the option that sounded best to me was buy only. So you're just buying of the underperforming ETF and it'll automatically rebalance for you. So right. if certain ETFs are underperforming, those are the ones it automatically buys without having to track this on a spreadsheet or something like that.
And that's basically what I understood. And I think really it's just another point in that continuum where you're saying, okay, I'm willing to pay for a rebalancing. To be honest, if it were me, I would have to compare it against the Vanguard all-in-one ETF solution. Just because if you don't mind doing the legwork of opening a discount brokerage and sending the money there from your account, just buying that one or two ETFs that Vanguard offers. Well, it's one ETF. You'll pick what your own risk profile would look like, and you'll go from there. So I would have to compare it against that. But obviously, then you're giving up a little bit on the sort of advice and even on the design side. That's another thing with Robo-Advisors that I found in recommending them to a lot of my friends is their platforms are just put together by really smart people and they look really nice. Yes. Wealthsimple has done recently some cool things with email and that, and just when you have such a big group of smart people designing something, that design encourages you to use the platform. And in the case of investing for the future, just getting that behavior, that consistency in investing, that can be sort of the difference between that $1 million retirement nest egg or a $200,000 in retirement nest egg.
Yeah, if it gets someone started, for sure. Not only is it easy to sign up, much easier to sign up than than with a broker. You can literally do it on your phone, and then they're getting that advice on top. Like that's probably two of the bigger barriers to sort of that how to buy stocks question. where
it is, yeah, for sure.
Yeah, you could decide today just to sign up for a Robo-Advisor and you're done. So can you run through some of the top Robo-Advisors and what makes them unique? Every time I'm asked sort of like, what's my top pick, it's tough because it seems like it depends on your needs. There's a lot that are the same about Robo-Advisors, but there's little differences. So I was wondering if you could kind of run through sort of what's better for what kind of person.
Yeah, we're pretty unique in Canada. Down in the States, there's sort of a couple big fish that swallowed the others pretty quick when it came to Robo-Advisors. And in Canada, we seem to have found each one has their niche, and maybe that'll change one day. But I like it for Canadian consumers right now. I think it's awesome because you can compare and contrast, and there's obviously competitive pressure on each of the robos to sort of compete with one another and keep their prices low.
Mm-hmm.
I mean, there's everything from, BMO and RBC. Now they technically don't call their platform smart, or they don't call them robo-advisors. They're a little bit different.
Yeah.
And they are a little bit pricier than some of the other options on the market. But if you're looking for like a trusted brand name and just ease of use, like if you have already an RBC checking account or a BMO checking account, they're so easy to use, and they're all on the same dashboard when you log in, and you're going to get a pretty good diversification there. They're mostly passive investing. So if you're looking to stay with your big fish that you're comfortable with, that's certainly better than a lot of investing options that have been out there in Canada. By far the biggest, and you've probably seen commercials for them if you live in Canada, is Wealthsimple. If I had an award for like best marketing and ad campaigns amongst like almost any product, it might go to Wealthsimple. I think they've done a fantastic job of marketing. Mm-hmm. They also, because of their size, are able to offer, they're just able to offer sort of a level of service that a lot of other, I shouldn't say level of service, they're able to offer a lot of platform options that some of the other robos aren't. And just through their sheer size, they are able to sort of innovate maybe a little bit easier. They just have more hands on deck than some of the other robos do. I would say the feedback I've heard is they are very user friendly. They gear a lot of stuff toward young people. Like you said, Tom, you can sign up on your phone, which is not all robo-advisors, but Wealthsimple specifically was the first one. You can hook it up to Mint if you're into the budgeting. Mm-hmm. So they're kind of a great all-around option. I encourage you to compare what Wealthsimple has to offer with what else is on the market. Then you got companies like Nest Wealth, who they're great for all investors. They're a subscription-based service, so they charge their fees a little bit differently, as it's not a percentage of the money. It's an overall subscription service, which a lot of people think are sort of going to be the future of the industry. So especially if you have a sizable portfolio, Nest Wealth really makes a lot of sense, because you don't want to be taking that same percentage off. Why should we be taking a percentage off of $1 million, the same percentage as you would off of 100,000, is the argument a lot of people make.
Yeah.
And then you go into, say, like Modern Advisor, where they have, to my sort of calculations, probably the absolute lowest cost, I think, at last time I checked. And, again, another solid product to compare. And then there's some of the smaller fish that really bank on sort of offering unique aspects. One of the sort of most unique ones that I've seen is Wealth Bar. And they really pride themselves on offering some different socially responsible investing. They really pride themselves on giving you the best access in the business. And this is debated, but this is what they pride themselves on. The best access to human beings and to setting up that personalized account. And they also do kind of a neat little thing where they're going to put a slim part of your portfolio into like an alternative investment, like almost like an infrastructure investment. And I'm not sure, I haven't read all the studies to see if that's going to give you sort of outsized results, but it's a bit of a different take on sort of traditional couch potato ETF investing. And finally, correct me if I'm wrong here, Tom, but I believe it's Just Wealth that has the target date RESP. Is that correct? Yeah. And that's kind of a unique product. And I know the guys that run Just Wealth, and their platform maybe isn't as shiny, but they always say that they're not a tech fin. They're not a technical financial company. They're a fintech. So financial comes first. And they certainly have the background to back that up. And they're the only ones that I know of that have a target date RESP. And that's a really cool product. If you're a parent out there that doesn't really know how to get that RESP going, I encourage you to look at Just Wealth and check out what they have going there.
Yeah, I think they have the most portfolio options, period, too. Like there's a lot of different little sort of niche things they offer. And I fully agree that Wealthsimple's kind of the easiest overall pick. I should mention they're often a sponsor on the show, but that is not affecting my opinion of them. They are sort of the biggest one out there. So it's the easy answer, but it's not the perfect answer. Like you just went through, everybody needs a different thing. If it's an RESP, there's definitely better options.
What I tell people is a lot of these companies, in fact, all of them, I believe that I mentioned, they all have, right now they're all competing for clients. and they all offer either like a certain amount of time or a certain dollar figure managed for free. And I tell people, do your homework, pick your top 3, and then just get a feel for the companies. It's not going to cost you anything. It'll cost you 20 minutes to set them up. Take that time, go through it's even interesting to see how different robos, if you answer the questions a certain way on the initial risk tolerance, the different like risk profiles that they will sort of start you off at, and just see which one you're most comfortable with, and then go from there.
That's interesting. So you mean like go all the way through with signing up? Like if you have $3,000, put $1,000 in each? That's
what I've recommended. I mean, you're going to get it in a lot of ways. It's the most frugal option, actually, because you won't owe any fees on that money. And the vast majority of them will cover like any fees that are charged to leave the company. The other company will usually pay to bring that account over because they want your business, right? So a lot of people have come to some interesting conclusions. And I can't say that out of the people I've talked with, any one specific robo has been the always pick. It's interesting what different people value and subsequently which one they chose.
Yeah, as like you said earlier, it's interesting in Canada that everyone's kind of carved out their own little niche here, and there isn't this one robo-advisor that necessarily sticks out 100% over everyone else. But there's one new robo-advisor, and maybe I'm only asking this for my own personal interest that I heard about, was Planswell. I know nothing about them. So do you know anything about them? I think it's something that makes them different as well.
I do know. I wrote a review on Planswell and I went through. They, in a lot of ways, I would say their closest comparison maybe is Wealth Bar. Planswell is very interesting in that they're not just a robo-advisor. I called them the Robo-Advisor Plus because in a lot of ways, they ask you, it's actually quite a substantial questionnaire you go through when you start, and based on that they make not only investment recommendations in terms of risk profile, but they also make insurance recommendations, and they will actually look at what sort of a better deal you can negotiate on your mortgage. So they're actually an insurance broker, a mortgage broker, and a portfolio manager all in one, which is kind of cool because a lot of Canadians don't understand that they can save a lot of money on their mortgage if they were to renegotiate, that they don't just have to take that 5-year fixed rate that's on the letter that their bank mails them every year, or every 5 years rather. And they also don't really know, just because insurance is kind of a boring topic and it's kind of morbid to think about, whether it's life insurance or critical illness insurance. And Planswell seeks to advise you on that. So they're kind of an interesting option to check against as well.
Yeah, interesting. The only other thing I really wanted to ask you was just with all this coverage you've done on robo-advisors in the past, if there's sort of one thing you think that they could be doing differently, like maybe something that they're all missing.
Right. There's some interesting, I didn't really think of this. I'm blatantly stealing this from John Robertson and Chris Enns that I heard talking about this one time. And they had some interesting thoughts on applying sort of behavioral solutions, but applying them to robo-advisors, almost like forcing people to get a bit of an education into what their money's actually doing, so that you get, because I got so many emails from people, I cannot emphasize enough, that were like, well, I'm going to try this robo-advisor and see how their performance does over 2 years. And I'm like, I'm telling you right now, that's not the way to do this. Yeah. Like, they may have good returns in 2 years. They may have terrible returns in 2 years, but you need to understand what they're doing, what passive investing is, before you'll really understand what your robo-advisor is doing for you. And so John and Chris and Sandy Martin was another one, who was sort of talking about this, was they could do some cool stuff with email messaging and texting, and just like give almost like little 10-second or 30-second mini lessons on, like, hey, did you know that this savings rate, I don't know, we'll do this, or did you know that, the best performing market of the year 2 years ago was the Chilean market, because we didn't know that ahead of time, and guess what? Not many people did, and that's why we passively invest. And I think Wealthsimple's done some stuff in that regard, but I think maybe a little more. I'm a teacher, so I'm always biased towards education. I think maybe a little bit more of that, figuring out, like, they have smart, design-oriented people that are going to be way ahead of me. So figuring out little creative ways to sort of slip in education into that platform, I think would be pretty neat.
Yeah, it's a good point, especially about sort of this idea of performance, because I've brought up Robo-Advisors before, and the topic always seems to be, oh, I prefer this one to that one because they did better over the last 6 months.
Yeah,
it's just not the point. Like when it comes to ETFs or Robo-Advisors, the only thing you can really focus on is fees. Otherwise, they're roughly tracking the same markets. Like you're going to get a little bit of index error, but it's not the main point. it's
over the long run, those index errors too, they're going to even out. Like they're going to be whatever ETFs you're using. Like you say, there's really what there is the fees. And to my way, most of the ones we listed, like please check out fees. But most of the ones that we talked about are pretty competitive on fees. Really, it's what platform is going to encourage you to invest the most, whether that means you want a human touch, whether you just like the way the app looks. I'm not judging anyone. My whole thing has become, when I started recommending passive investing with ETFs 8 years ago to people, and most of my friends just had this glazed over look on their face, even though I don't really think the math is that hard. It's just a lot of weird terminology. Yeah. So I have like Calm 180 on this, where I'm like, whatever encourages you to invest, whatever encourages you to open that TFSA or RSP and set up that automatic contribution, go with that one, because your behavior is going to be a much bigger determinant than that 0.1 outperformance or that 0.05 difference in fees that you're being charged.
Yeah, it's like anything related to saving or investing. Like you're better off to start now than to spend all that time.
Exactly. Yeah.
Okay, well, thank you for being on the show. Can you tell everyone where they can find you?
Yeah, the Canadian Financial Summit is just around the corner here. So definitely check out Canadian Financial Summit. You'll see Tom is giving some really cool insights on how to make money online. I got really smart folks like Preep Banerjee and Rob Carrot coming on to discuss various different topics, including a little bit about passive investing. So if you'd like to learn more about that, that's where you can find me these days.
Great. Thanks for being on the show.
Thanks for having me.
Thanks for listening, and thanks again to Kyle for his insight into Robo-Advisors. You can find show notes for this episode at MapleMoney.com/Kyle Prevost. You heard Kyle mention the Canadian Financial Summit that he hosts. You can sign up for a free ticket to this virtual personal finance conference at MapleMoney.com/Canadian Financial Summit.